Hello guys, it's Randall with BitRaged. So today we're going to look over my trades for September, and hopefully you can glean some insight into how I trade and why I trade the way I trade. Also keep in mind that last month I was testing the new Rage entry in Beast Mode Management. So I took a lot of losses I normally wouldn't take just because I was testing different types of entries and we're looking for the best. As always with the BitRage trading method, we are looking to hone in on the absolute best, most probable entries so that we take the fewest losses and the most profit. To get to that point, I'm willing to focus 100% on testing this, and I can take 10, 15 losses and I'll be okay because I'm still going to turn a profit at the end of the day. So I'm willing to do that, and then once we release this, my goal is that it's going to be really profound and have a huge impact on the community. Now, I love what we're learning. I love this style, and the Rage entry and the Beast Mode is just going to take the BitRage trading method to the next level. It's going to supercharge it. So I'm really excited about this, and I'm looking forward to releasing this to the community, hopefully this month. If you're not a part of the BitRage community, if you're not a trader yet, I encourage you to click the link in the description and sign up for our course. That will get you started on that journey. It will also help you understand why I take the trades I take, because I do not trade like most people. It is very different. With that said, just before we get into the actual trades, I want to just remind all of you that there's some impulsive movements on a number of pairs right now. You're seeing this on the euro specifically, but also other pairs like CAD yen are really going wild. Be very mindful that you're following your trading plan and you're not getting emotionally involved in the market. In our September 30th video, we mentioned that we were looking for upside, but we also mentioned that there was a high probability that it would move a little bit lower to catch everyone on the wrong side, then move up. And what we've done is we've basically double bottomed, formed that arcing nature, that descending corrective movement to the bottom, which if you're part of the course, you know this stuff and you know it increases the probability. We move up, we start to form a flag, and everyone's expecting this to move to the upside, and it throws a curveball and it moves back down. Now, when people see this, they're expecting this is moving to the upside. When they see this, they're expecting it's moving to the downside. This is how most people trade. They trade emotionally based on impulses and just viewing it in a very tunnel-visioned perspective. And when you do that, it really causes you to lose a lot. So all this was catching people on the wrong side, because this movement here didn't catch enough people on the wrong side. So it moves back down to catch a lot of people on the wrong side of the market before it moves up. Now, we are expecting that this is going to continue in the long term up higher, at least to this 90% area. But I will keep you guys updated, especially in the Slack group, on this. But I just want to mention that because I think it's important. A lot of people get confused in these areas, and it's just the market moving before it moves, if you will. So with that, let's get started and look at my trades for September. Okay, so this is the trading journal that I'm currently using. It's Notion. I really like the customization ability of Notion. I really like how I can basically use a spreadsheet, but then it opens up into a document. It trumps Evernote on every level, in my opinion. But you use whatever works for you. You don't have to use Notion. It's not going to mean the difference between success. But if you want to use this, it'll give you a little bit of an idea what to look for. I put my trading plan in here. I encourage you to do the same. That way, when you're taking a trade, you quickly glance over here and you see if it meets the criteria. And if it doesn't meet the criteria, if you don't have 3 points of confirmation, that is not a trade that you should be taking. If you do that, it'll help you avoid losses. You can also put in here your management. So how are you going to manage trades? If X happens, then I'll move my stop loss to Y. That way you're not just moving it based on emotions. So this is a summary of my trades for the month of September. I did take a lot of trades, more than I normally would take probably, about 31 trades. 13 of them were wins, 2 break-evens, and basically 16 losses. One of those losses was less than 1%. But I ended the month at 28.99%. I was hoping to break 30%, but it really doesn't matter. I'm happy with 28.9, and we're going to get into these trades as we go here. So the first trade I took was euro dollar. It was 1.94%. And if you look at this, what it does is it allows me to create a document in here and document the screenshots of my trade. I also have review questions. Is this a trade that I should have taken? And go over that. So if you look at the 1 hour entry here, it was this one here. I entered on the 15 minute. So you look at the 15 minute here. That was 15-minute candle on the double top, and I was looking for this to move to the downside. If we look at the exit, it moves down and then it moves back up. I exited. I had my stop loss set to be tagged out if it moved past these highs. It does, and it does move down a little bit lower again before it moves up. So I took 1.94 from that trade. It was actually, it turned out to be a decent trade. Not as much as I had expected, but it did turn out to be a good trade. So then you go over your review questions. After reviewing this trade a second time, has my analysis changed? Did I follow my trading plan when analyzing, executing, and managing? Could I have entered or managed a trade better? What happened after the trade was closed out? And my final thoughts and lessons learned. If you do this on every trade, I guarantee you it's going to make a profound impact on how much you grow in trading. And you review these trades. I have this set to first review. So running, closed, first review, and then final review. And then once that's done, you set it to final review. The second trade I took was Euro Aussie on the 15 minute. I took this on the 15 minute as well. I was testing a couple of 15 minute, but I didn't do very much 15 minute entries last month. So took it on the retrace there, and it turned into a descending channel, and we know that descending channels like this can move to the upside. However, a lot of this was still very impulsive. I did end up getting taken out there. Had I stayed in and managed according to beast mode, would have exited with about 4.7. So this trade I took 0.84. I exited too early, and that's why we've been testing the beast mode management, because it basically takes the emotions out of it. It makes a big impact on that side of things. The reason I did exit was because the market had become corrective, and I figured 5 p.m. spreads would take me out because we were really close to the entry. So that was Euro Aussie, 0.84%. British Pound CAD, I took a break even on this. This was a flag entry. This is an entry I won't be taking anymore, and I'll explain why in a moment. But this is the 15 minute. It moves pretty much correctively. It doesn't really impulse out of there. I moved it to break even because of the volatile market on 5 p.m. and then arced back to break even and took me out. So had I left this open for beast mode management, it would be 6.8%. So already in the first couple days of the month, I'm realizing that beast mode would save me a lot. Obviously with beast mode, you're going to lose a couple trades that you would have taken 1 or 2% on, but in the long run, you're going to be taking 4, 5, 6, 10% on trades that you would have taken a break even on. So in the long run, it does pay off. The entry was good. It did have one negative factor, which was the high wicks. You have to be careful of those. often when you see that, it means that it's going to stay corrective for a little bit. So you got to keep in mind that. I should have left stop below previous low, and I would have had taken a 6.8 on that. The next trade was British pound dollar. This was a really beautiful trade, and it just really worked out for me. Now I will say it does have this long wick, so you have to take it as you will. You have to set up your trading plan, figure out at what point you listen to those long wicks and not. But I did take this trade, and it really turned out to be a nice trade. So we'll talk about these other two trades I took, but I took this and I rode it all the way up to almost 11%, and it even went farther. I could have taken about 16.84% if I had left it open longer, but it did correct quite a bit after I exited. So there's a point where you have to decide how you're going to manage the trade and why, and then stick to it. So I'm happy with almost 11%. It was a really nice trade, and so I pretty much followed my old trading plan, not beast mode. If I had followed beast mode, I would have taken the 16.8% or close to it. So final thoughts is don't second guess the process. That was British pound dollar. Euro CAD, I took 0.58%. And if you look at, you can't really see that. Let's look at the 15-minute. So I took this as more of like a pennant style on the 15-minute. I set stop loss to previous low of descending pattern before bet. I figured a break above that would indicate something has changed. So I moved, once this broke, I moved the stop loss to just above the highs. And as figured, it does break up and take me out. So that's why I took a little less of a stop loss. I still consider this trade to be a valid trade. There's nothing wrong with this trade, just sometimes they don't work out. Now if you look at the larger pattern, it rejects off from that area. Had I been awake, I could have considered taking a break even instead of the 0.5% I think I took as a loss, but it really doesn't matter too much to me. It's not that big of a deal. Okay, so British pound dollar, this was a scale-in entry. That's the first position. This was the scale-in I took. I didn't take this because I wasn't at break even yet. I would have taken that, would have been a valid entry. But I took this one, and you'll notice the reason this ends up being a 1% loss, and it just barely tags me out. So in hindsight, I could have taken this longer candle, which I prefer not to do, but I could have taken that longer wick candle, and had I done that, I'd be at 8%. So in hindsight, I don't really think the trade was valid. He didn't really have two official lows. It was a little bit premature. So it's a trade that it was a valid setup. It wasn't a high probability setup, and I really didn't wait for all my criteria. For some reason, I think I thought the criteria was there and it wasn't. So it was a little premature. Otherwise, I would have taken a profit on that trade. But you live, you learn. So that was 1% loss. This is Aussie dollar, and I took 5.13. And I actually ended up getting tagged in before the hourly close. Not sure exactly why that happened, but I did. You look at the entry, I rode this all the way up. And it came up to here. I had my stops set here, and it got tagged out for 5.13. Now, if you were to look at this trade, I think a lot of people would have stayed in deal here. It impulses, it moves back to about half of that. A lot of people would have exited. It moves up and then it moves back correctively. I think a lot of people would have exited. But beast mode management allows you to stay in longer. So that's the reason why I stayed in. And it took I took 5.13 out. This was an excellent trade. I really like this one. Yeah, it was a really nice trade. So 5.13 on that one. Now, Euro British Pound. I took a couple trades on this on the way down. It was moving correctively, so understanding that this could just break to the upside at any time. You have to understand that. But it is also Euro British Pound, and Euro British Pound can sometimes trickle down correctively and then still move correctively down. It does happen. So I don't remember why exactly, and maybe I have it in my notes. Yeah, I don't remember why my stop loss got moved. It must have been by accident because I don't remember moving it. But I had my stop loss above where this wick would have hit originally. I think it was 16 or 17 pips. But somehow it got moved, or else I don't know why. But I end up getting tagged out, and it does move down. Regardless, a lot of times I do take a 15 pip stop anyways, so. But I originally was higher than the 15 pip. But I did take a loss on that because of that. This is British Pound, dollar again. This is the third entry I took up here. And that's the daily. Where's the exit? Okay, so I got tagged out for a full 1%, and it does continue up. It moves a little bit more correctively after this, but I'm no longer going to be taking these type of trades because they don't work out as often, those type of range entries. I was testing different things. That was the beginning of the month, so had I actually gotten both of these trades, man, I don't remember. It would have probably been 20-25% I would have taken on British Pound dollar last month. New Zealand yen. Now this one I took, it was a tight flag. I like this style overall. It does have that high test wick. You do have to be careful sometimes of those, but I really do like that entry. And this was a really nice pair last month. It just really worked out. I got 3 trades on it. I took 10% on this one, and I rode it all the way up, and it was a really nice trade. So I used beast mode management for this one. It moves more correctively up in some areas, but that was a beautiful trade. Now, let's just skip down and do the next Kiwi yen here. I have both my 2 trades, the other 2 entries in this one, so it's not 2 separate. But that was the scale in, and that was a scale in. That was a great trade, and that was an okay trade. So I took 4.09% on the first scale in, and I got tagged out for 1% stop loss on the second scale in. And yeah, that was because I was following beast mode management. Had I not been following beast mode management, I would have taken a break even on this trade, but I would not have taken 4.09% on this trade. I would probably taken 1% on this trade. So if you even it all out, you're going to take less on some and more on others, but in the end, you take more out of the market. Yeah, this last trade that I took, it is almost on top of another correction, which, if you think about it, that can just form a ascending corrective movement to drop out. So I was happy with those, and we'll move back to British Pound Yen. British Pound Yen is not one of my favorite pairs to trade. I don't know, it just really isn't. And this style, I'm going to be careful on. I don't like this style of trade anymore, and so I'm going to be very careful in the future. It was a decent entry. It wasn't a terrible entry, but it just moves correctively after the entry, and it does move up eventually into profit, but my stop was too small to stay in. But not a big deal. So the next one, that was the last British Pound dollar. It's this last one here. You'll see here this entry, this wick, it tags me out, and then it moves up. Not much you can do about that. And in hindsight, due to these wicks, just a little tip, sometimes if you see this type of pattern, long wick, a little bit shorter but still long wick, and a couple tiny wicks, it's not unlikely to see that same style pop to the downside. Just kind of test both sides, and it does take a long wick to the downside, so that can happen. But you can't know that for every trade, and so I do take a 1% loss on that. So my biggest losses, I think, for last month were British pound dollar, but then one of my biggest gains was also British pound dollar. Dollar CAD does have that long wick again, so you have to be careful. But I took that on the hour, and it moves very impulsively down after my entry and takes me out in the first candle. And it does eventually move up, but it moves up very wicky. So there's no way I would have stayed in this trade. It just wouldn't have happened. And yeah, this really wasn't a valid entry because you'll notice that it's testing the bottom, and it's basically just double, triple, quadruple bottoming, which means that when that breaks, if it does, you could get a very impulsive movement, and we do. Entry was not valid according to my style, and I will no longer be taking trades like that. So that's dollar CAD. Euro dollar. I took this, and this should be over here. I took it on that retrace. It moves up, and right now it's about 2%. So you might be wondering why I would take a loss or a break even on that. But, the potential, you look at what is potential. Are you willing to sacrifice 2% for 10, 15, 20? And then it just drops off and it takes me out. So I'd moved to break even before that point, I think. Yeah, we start the flag with very long wick rejections. I don't really like those style. And I probably won't take this trade again. Just if you look at it, just the style of it moves up, double tops. It does break above that, but just it's almost like it's begging to form that double bottom. It wants to form that second low, and it does. If you look, it comes down to form that second low. So that was that trade. Aussie dollar, I took 2.46% on this. I really liked this entry a lot because I think this was one of the few that I took that wasn't a rage entry. And I just really like this style a lot. So 1, 2, third touch, and a double top. It doesn't quite make the double top, but my stop covers me in case it does. So if it breaks above this area, then it's probably moving higher and it would take me out anyways. Took that and just wrote it down to about here. When it formed a triple touch on this pattern, then I decided to move my stops just above this high. So if it moved up, I would get taken out. In hindsight, had I followed beast mode management completely, I would have stayed in a lot longer, and I think I might have noted this. Yeah, moved to 14%. So had I followed beast mode management, I think I would have had between 10 and 14% instead of the 2.4. Okay, so yeah, this was the position that I moved it because of 5 p.m. the stop loss. I didn't want to get tagged out for the stop loss. And my scaling, which I will look at in a minute, would have probably gotten taken out, but this one wouldn't have. So I should have left this in beast mode management and not worried about it, and I probably would have had closer to 14%. Okay, so Euro Aussie, that's a 1% loss I took, but I would take this trade all day long. You have that impulsive movement out, you have a hover flag, and you have a perfect formation of a third touch on a larger flag, and that retrace, that impulse. It's a small one, but it's it's enough. Coming from a large descending channel, so I would take this all day long. The only thing that went wrong with this is it does move correctively down before it impulses up, and it does do what I expected. So this can happen quite a bit. The biggest thing with these type of patterns is if you're going to take them on a third touch, just be understanding if you get tagged out and it forms this type of corrective movement, retake it, because 9 times out of 10 that's going to be the move. So if you take 1% loss, you might get, it back. And I didn't re-enter. I'm not sure why. I think I might have been away or asleep. But it goes to 5 to 7%. So even if you'd taken 1% and then taken it from here, you'd be up 4 to 6%. So I really like that style of trade. It's one of my favorite outside of rage entry. So this was the scaling for Aussie dollar. It was 1.17%, and this is the one that I moved the stop loss because I didn't want to get tagged out. So I got tagged out for 1% instead of taking a possible break even due to spreads. And had I not gotten taken out for break even due to spreads, I would have taken a lot bigger percentage. It says about 7%, so that would be something I would not do in the future. Euro Kiwi. Now this is moving quite correctively up, but Kiwi pairs can do that and still continue. You do have to be careful taking such entries, but I took it close to this ascent trend line, and so I was willing to take that risk. It ends up being 1.79% trade, but it does move very correctively, and it does impulse out of that. So it's an ascending corrective channel. We are expecting this to sell, and it does sell. You can take trades in there. You just got to be very mindful of that and not get too caught up in your buy. So Aussie Swiss, this is a pair that you do have to be a little bit more careful taking. But I took that as a pennant style. And it almost immediately drops out and takes me out in the next, 2 hours later. And then it just falls out. So there's a couple reasons I wouldn't take this trade again. It was invalid because I didn't wait to confirm that the trend had changed, and it turns out that was just a larger flag to drop out. And so you have to be careful with that style. This is Euro British Pound, and I took this as a impulse flag, and I liked it. There's nothing wrong with that trade. Yeah, it's a trade I would take all over and over and over again. Yeah, I could have taken a 0.5% had it been around, but it's not a big deal. If you look at what happens, it does move down, it does touch this trend line, and then it moves back up very wicky, and then it drops a little bit. And if I remember correctly, it kind of just moves correctively after that. And you'll notice here, I want to keep you in mind of this. From the 19th, this Aussie switch trade, until the 25th, I took 2, 3, 4, 5, 6. I took 7 losses in a row. This is not normal for me, and had I not been testing rage entry, it probably wouldn't have happened, but I took 7 losses in a row. So don't let losses put you off. If you're following your trading plan, if you know the bit rage method, and you're following it, you're following the trading plan, you're following your management, and you're being consistent, sometimes you can take a few losses in a row, but the ratios demand wins if you're following correctly. So unless you're taking invalid trades, it's going to come back and it's going to err on your side. So Aussie CAD, I took this as a little bit steeper flag, and from an impulse, and it turns out it just moves up to start to form this corrective descending channel. And you got to understand that this can happen when you see this corrective movement down. Even though it impulses and impulses down, you got to be mindful that this can just be forming a descending channel. And it does continue down lower, but it moves up first. So it's a trade that can happen. I understood the risk. I would take that again. Dollar yen. This is a trade coming from a break of an ascending channel with a larger flag. I should have taken this and I didn't make it, but I got in on this one. I do not like this style and I will not be taking this style anymore. It's just not a trade I really like. You look at the exit, it just double bombs and moves off, and this happens a lot in this style. So photograph this in your mind. This type of entry you don't want to take. 9 times out of 10 it just doesn't work out. So yeah, I would not be taking that again. Euro Kiwi. This is one, and you look at this, I took this here. You'll notice, you remember that, we just reviewed that. And then we're coming down here and I'm taking a trade here. Most traders can't do that. Most traders get stuck in a biased mindset where it takes them a long time to be willing to take the other side. But for me, the trend has changed. I'm going to get in. It's a flag. I'm going to get in on this. So understanding the style that we teach, understanding how to manage your trades and how to enter them, we can flip our bias. And we can see, okay, the trend has changed. I'm going to sell now. And so I did that. And that being said, I do take a 1% loss, but that does happen sometimes. And it does overall move down. And it double tops here. It happens. Now, as this developed out, I saw this accordion style or whatever you want to call it. Can't think of a better name for it. And I knew when I saw this that there was a high probability that I was going to get tagged out, and I did. So it does go down to 4.5%, but you know, it is what it is. I followed my trading plan and I entered the best I could. I will be careful on these type of trades, but that is what it is. Kiwi dollar. It's a sort of a flag, but in hindsight, I don't really like this style either because that's a double bottom and it's really nowhere. So I don't really like that. So it moves up and then, so it moves up to about 2% profit and then it moves out down and tags me out. So again, it's a trade. I'm not going to take that 2% on the this green candle because there's no reason to. There's no evidence that this can't just retrace and still move up. So I'm not going to take 2%. And I'm leaving it at 1%. And, you know, that'd be beast mode management. So I took a 1% loss on this. It does move to 2%, but I prefer that. It does start after a little bit of a wick, but yeah, I wouldn't be taking this anymore. And one of the reasons why is because of this. It moves down, it moves up, and then forms a flag, and that style I don't really care for. So, Aussie dollar, I take another 1% loss on this. So, this entry here, it does have that rejection wick. You have to be careful with those. And it just moves correctly, spikes up, and then it just moves sideways. There's nothing you can do to prevent this. This can happen on any trade. That being said, that candle that was bearish and then turns bullish, and it is a kind of a cross between a doji and a hammer. You know, you have to be careful on those because they can indicate indecision in the market, and is exactly what happens is indecision. Dollar swished. I really didn't like this pair for a long time, but I'm starting to really like it, and the reason is I think I'm starting to get a hang of how it moves a little bit better. I wouldn't recommend a beginner trader jump into the US dollar Swiss and just start trading it, but it can be an interesting pair, and there are some good moves. It makes some good moves, and if you see some of the moves the euro dollar Swiss has made in the past day, you'll know what I'm talking about. So it's a flag formation. It does have that wick, but dollar Swiss moves in its own right. So I looked at this on the 15-minute tight flag. It turns into a larger flag. So hover flag, larger flag, double bottom, and we move off. So I saw that as a decent entry. We look at this, and so it moves up. It moves back down into a negative. It moves back up, and then it triple tops. And I took the triple top. So I waited for the double top. I waited for it to form a flag to move higher. And on the triple top, I took profit because I knew a rejection on that triple top, which we got, would probably indicate it was going to move down again. And I think this wick would have taken me out, but I'm not sure because it's covered. I think it might have taken me out, but maybe not. Trade was valid. I didn't follow beast mode on this, and the reason was because of the triple top and my experience with dollar Swiss in trading recently. So, and it was a Friday, and I didn't want to leave it open on Friday. So, a couple of good reasons. Euro CAD. This was 3.89%. This was one of the last trades I took. So ascending, the 3-touch wedge pattern, it falls out and just starts forming impulse corrections. I took this flag. I knew it was close to a double bottom area, so you have to be careful of that. But I'm also not going to not take a valid trade because of that. So we do have that evening star formation. And I took that. It moves very correctively. It does double top, and a lot of people would have taken a break even. But I did choose to do beast mode management on this, and I stayed in. And I moved my stops only to this after we broke that low, and we moved up, and I got taken out for 3.89%. This was a great entry. I really like this style of entry. I used beast mode. I followed everything the way I was supposed to. Basically just stick to your plan. The last trade I took in the month was a loss. It was Kiwi Yen. And honestly, what are you going to do about it? So it's that overall flag pattern. And if you look at this, look at what happens here. That first candle basically takes me out. It does move up, as I was expecting this type of formation should, but instead of moving up to continue, it's basically just triple top and confirming this as a flag from this. So impulse correction to move lower. Had I had been in this trade and I'd seen this rejection, I probably would have taken a break even and then flipped my bias. But I didn't, so I took a 1% loss, and that's fine. I don't have an issue with that. That's just the way it works. Yeah, volatility took me out, my stop loss. And then it continued down. I don't know why I said as expected, because I was trading counter trend. But that is what it is. Most of the time, this doesn't happen. But if it did, and the other thing too is you could have actually seen this as a retrace and taken that as a sell. That would have been more valid trade than this that I took. And in hindsight, having that doji, the big retrace, it's basically an evening star right on the trend line. I missed that, but had I actually thought about it, that trade I would have taken and would have banked a decent profit. So, there are times when I don't notice things, and, we all do it. So you have to, sometimes it's good to delete everything off your chart and just look at the raw data and then redraw. And sometimes you'll catch them like, oh yeah, that's retesting there. So why would I see this as a flag? So, just a couple things to keep in mind. But those are the trades that I took for the month. I ended the month at 28.99%. And as you can see, I took quite a few losses, actually more losses than I normally would. But it was a really, really good month. And I'm expecting as I develop out the rage entry and beast mode that I'm going to refine it, take a lot less losses because I'm not going to be testing or taking as many of the entries that I've found to be invalid. And my goal is just to grow. So I'm not just looking for bigger and bigger percentages because that's not what it's about, but I'm looking at growing as a trader myself. And as I grow, I want to see you guys grow as well. And I want to see you guys succeed. So that's why I'm doing this. I'm hoping that it will benefit you guys, especially those of you in the course, because I know that you understand the trading method that we teach, and it's going to mean a lot more to see, the different entries I took. We will be releasing the rage entry and beast mode management to the community very, very soon. I am a perfectionist, so I do want to iron out some details on it. If you are not currently using a trading journal, I highly encourage you to do so. Document every single trade, review it every week, every month, and then every quarter, and see if the trades you're taking are valid. And look at your losses and look at your profits. Which are the trades that you're taking and you're making good on? If you go through them and you say, you know what, that style, 9 times out of 10, this style is giving me 5-10%. And then you look at another style and you're like, that entry, 6 times out of 10, it's really not performing for me. It doesn't mean you won't take it. It's just maybe I'm not going to take it as often, or maybe I'll only take it under these circumstances. And you refine it and you lower your risk, your losses, and you're realizing, this pair and this entry just really work for me. And I've been backtesting EuroCAD with the rage entry, and there are certain pairs I'm telling you that be extremely profitable. So, but it takes time and it takes really putting the effort. So this doesn't happen overnight. It happens months and years. People go to school and they're willing to go to school for 4, 6, 8 years to get a degree. There's no guarantee that once they get that degree and they leave school that they're going to make money, that somebody will hire them. Yeah, people are not willing to put in 2-4 years into trading before they make money. And yeah, if you were to put 2 or 4 years into trading, the way people go to school, and you were to study with that fervor, I guarantee you that it would be almost impossible for you not to become a profitable trader. It's almost impossible. But you got to put in the effort. You got to be willing to put in 6 months, 8 months, 12 months, 2 years if it takes that. Just be committed. It doesn't happen overnight. So that is the trades I'm looking at. It's a little longer video, but if you're interested in the trades, that's what I did for September. If you're not a part of the course, not a part of the BitRage community, I encourage you to click the link in the description and sign up. Things will be changing a little bit, and we will be focusing more on mentorship and really helping to train people to become the traders that I know you guys can be. If you have any comments or suggestions for future videos or any thoughts, please drop them in the description below. And as always, thanks so much for watching.